Hey Alpha fan, welcome back to another episode of Alpha Commission. Today I wanted to show you a little bit about the EMAs and how they're crossing over on different time frames, just so we can get an idea of where we're at. Well, if we look at the weekly, you can see that this is the first time that we're starting to put in the potential for a squeeze play on the 10 and the 55 here, right? So in this case, actually I'm using, let's double check this really quick. I'm using, yep, the 55. Which means that as soon as this has a little bit of a positive slope to it, there might be a chance for a nice pop. That is on the weekly, and that would be a very interesting squeeze. We also see the 20 starting to turn up, which means that we're getting into this area that if we can just break through, we're having a chance to have some higher time frame squeezes to the upside. Now, we do have a downward slope on the 20 right now. And this 55 is just kind of neutral, just kind of hanging out. But we do see this positive slope on the 10 here, and that gives us a good reason to think that we could have some higher time frame, squeeze plays coming up down the line if we are able to break through this resistance at $42,000, right? Let me go ahead and see what the 50 is saying because that's also a common one that traders use. And 50 is actually a little bit more downturned than the 55. So again, just like the 20, it may take a little bit more energy before we're able to start really pushing through there. And so we can say that, just like these little wicks, at least on the weekly, we are getting these type of rejections at kind of a neutral 55 area. And that's just been keeping us repressed here around 42,000. So 42,000, and then the next level that we're going to be looking at is going to be 44,000. And what have I always been saying during all of these episodes for the last, couple weeks? We need to get to that 44 to $46,000 range, and we really need to hold it. And then just let time do its thing. If we can hold that 44 to $46,000 range, then we're going to get some higher time frame squeeze plays, to the upside, and that's going to be a very bullish sign. But we do have to grab onto it and hold it. So far, on the weekly, these 55s and 50s, have been kind of the blockers, just slapping us down. The 20 has also been slapping us down. And for the first time, we can really see that we're starting to get a little bit of support here from the 10. And, that's a good sign. If we can just kind of, close in this area and then retest the 10 and then kind of play around in this area, we could be on our way pretty soon. But you can see that there's just a little bit more work to do. So let's go down a time frame. And similarly, we can see here the 89 and the 10 are starting to be in a possible squeeze formation. What we're going to want to see is some type of positive slope developing on that 89, and then the price action walking up on the 10, and then we could pop up here. That would naturally lead us, to retesting the 20 on this 5 day, and then that could also lead to a pop-up that would lead us to testing this 55 on the 5 day, and then we're just talking about popping. We're just defeating each of these levels one by one, and getting our gains. So, at least for the weekly and the 5 day, that's what I'm looking at. Then if we go ahead and go down to the 3 day, it's kind of interesting because we've been in this squeeze play, right? We've been in this squeeze play. We did get that nice pump. But what happened? We got resistance, like we stopped short at resistance and we're coming back to recheck the 20. And so, if we lose this type of, $41,300 area, we're gonna be defeated. We're gonna be defeated at this level. And already you can see that the 20 is starting to have a more neutral slope to it, whereas previously it was kind of positive. Now it's getting more neutral, and the further we go down, the more neutral it'll be, and then it's just going to negate the pump. and we might have a rejection like we had before. We didn't even get into this area yet, which the previous pumps, gave to us. So this is a kind of a weak performance so far, but it's still, there's still time. He's got 2 days left, right? This is the 3 day. So let's check out the 2 day. On the 2 day, we did get a nice squeeze play here, popped us all the way up. Aha, and now we can see, what's been limiting us in this area. It's been this 200 on the 2 day. And the 200 EMA has basically been saying, nope, sorry guys, you don't get to go forward. We let this guy and this guy pass, but now I'm the blocker, right? So you guys have to deal with me. So we got a new boss at this level, and they're basically saying, you know, nope, sorry, you don't get to come in here. However, you do see that this downward slope is starting to turn more neutral. And so what happens if we are able to hang out in this area, again, not getting below that kind of like $41,000 area, but if we're able to just kind of like chill out here, right, then what we're going to see is this 20 and the 10 are going to kind of swoop up, and we're going to get a little positive slope if we can just get little wicks through here on the 200, which is difficult to do, but it's possible. Just keep trying to break through there until we get it, and then we're going to get a nice massive, squeeze play, right? But yep, for the 2 day, we're just we've got this kind of overhead resistance right here at 42,000, and it just does not want to give up. That's a very tough resistance. On the daily, same thing, but the 89. And, we're here already on a nice squeeze with the 55 and these 10 and the 20s, but we're getting, blocked by the 89. So the 89 is kind of acting against us on a lot of these different time frames. And then, of course, we have the 200 on the daily up here, so it's also rejecting these ones. So the 89 and the 200 are kind of working together. This 55 is not committed to us, and it's, we just are not getting the energy that we need to break through the system. You can see the 100 MA, is starting to join in on this fight. And so we got a little bit of extra pressure from the, from the 100 MA. But it is coming down quite a bit. So I don't know how this is going to play out, but it's not looking the greatest. This is a lot of resistance right here. And then let's see on some of these other time frames. This is actually looking interesting. As long as we can hold, this while these 200s flatten out, then we have a chance for a pretty nice pop. And then we've gotten above the 200s on the 12-hour or below. And so if we can maintain these squeezes and just get kind of a run, that would be interesting. But so far, the higher time frames do seem to be repressing us. And if you look at this pattern on the daily, again, I'm not trying to be bearish, just trying to show you like what's kind of been going on here. You can see that we kind of have these arcs that are being put in, right? These arcs, and they tend to converge where the let's see, what's a good color here? Yellow, green, yeah, because they're kind of bullish, right? So we get this nice swoop between like a couple EMAs. We get this swoop, scoops us up, pops us up, and then we're getting rejected by these 89s and the 200s on almost all the time frames. But you see where it turns around is really where on the daily this 10 is meeting with the 55. Okay, so the 10 meets with the 55, and we are just getting pummeled at that point. Here again, we are able to make a nice swoop, but the 10 comes up to meet the 55 on the daily, and we just get smacked down. So what's happening right here? Look at that, we're swooping up. We met the 10 has met the 55 on the daily, and so are we going to get smacked down again? You know, is this going to be another one of these bearish crossings? I mean, it's not even a bearish crossing. It's being rejected. It's being, you know, the 55 is acting as a blocker. It says, nope, you know, 10, you can't go any higher, right? The 10 is the red line. So the 55 is saying, you know, 10, stay off my property. You know, this, you don't belong here. Stay back. And so far, we haven't been able to get over this line right here. Okay, this 10 hasn't been able to get over that line. Just been, you know, it tried a couple times here, got rejected, tried again, got rejected, you know, trying again. But overall, you can say that we are putting in one of these formations that you are able to see on the lower time frames, right? So you do see that formation. I call them like lime slices or watermelon slices, you know, whatever you want to call it. You know, we are putting in this type of formation, and you know, interesting things do start happening when this starts to stretch out, because you know these things start, you know, these top bands start to flatten, and then they start getting positive curves too. And when the whole system has a positive curve, you know, when the whole system has a positive curve, then you get some really nice, you know, pumping action. And yeah, you might get limited by, you know, some resistance up here, right? Maybe we get rejected in this type of mid 50 area, get some crazy pullback, right? And then maybe we go on our way or we just keep dumping. But, you know, if as the system develops, you know, there is still that potential for bullishness, even if I just wanted to get that warning out there about how the 10 and the 55 are interacting. And by the way, I mean I already showed this before, but to show it to you again, I'm not using the 10. I'm using the 9, and I'm also using the 21. Use the 55. So if you want to match your colors to me, I use similar colors to who I learned from, CryptoReda. And you know, we just try to maintain some continuity so that we can look at each other's charts, and you know, we know what we're seeing here, right? I like the 10 and the pardon me, the 9 and the 21. Gives me a little, I just feel like it gives me a little bit more of a heads up than the 10 and the 20, but most people are using the 10 and the 20, and so that is going to give you more of a standardized, more of a reliable read. And then a lot of people use the 55, a lot of people use the 50, so that's up to you. And in terms of the 89 versus the 100, people use different, uh, you know, they have a different preference on that. It gives a totally different read, but there's different use cases. You can see this 89 MA and this, I mean, this 100 MA is the kind of gray one, and then there's this 89 EMA, which is kind of being the real blocker here. So just wanted to give some warning that we do have to kind of maintain our levels here. I think, you know, this 41,500. Yeah, I mean, I would hope that we could maintain that level. And $41,000, you know, is really what we want to hold, because otherwise we are going to start seeing these rejections pretty solidly. If we get under that $41,000, then you know, it's pretty much guaranteed that we're going to test the bottom of these levels. So, yep, that's what we're looking for. Otherwise, it just could be a pullback, and then maybe we have the chance to just buy some more time before these things start sloping up a bit more, and then we have that chance for that, you know, pop up. But we have had some pretty big moves to the downside when these things do get rejected from the 89 and the 200 up here. So This was a 26% move, right? That was a pretty big slapdown. This one was 20%, right? This one was 12%, okay? So maybe this one's going to be smaller, maybe just 10% or something if it's in line with this. But it could be bigger. We don't know. We don't know. It could be bigger if we do end up breaking below that $41,000 area. So just something to be aware of. Now, if we just take off the EMAs, and I just want to show you kind of a pattern that I've been seeing. Of course, I've showed you a bunch of patterns on a bunch of different videos, but just, really quickly, if you just kind of like eyeball what's going on here, you have this kind of like up, you know, it's kind of like castle formation, and then a down, right? So up, kind of a castle formation, kind of a swoop, and then a down, right? It's kind of up, kind of a modified castle formation, right? And I'm not really sure how this is playing out. It's kind of like a newish pattern because we are on an uptrend now, whereas these were on a downtrend. But it does look like if we were going to have, a big drop, sort of like this one and this one, that this would be the area that we have it, okay? So I made a video about, the ultra bullish possibility for Bitcoin and crypto. I'm going to go ahead and put a link to that in the description of this video. And I also made a video to show you like how Bitcoin could also potentially see like $25,000, $20,000. So kind of the ultra bearish scenario, right? I'm going to go ahead and post both scenarios. Right now, I've shown you that we're actually kind of in a neutral position where we're looking to pick up, these squeeze plays to just kind of pop up in this direction. And what we don't want is, to get, bent this way, and then we have the squeeze play down. That's sort of what we're doing right now, where we're, trying to figure out, are we going to make the squeeze play up or the squeeze play down? And the different forces at work are going to choose for us, right? So you don't have to be, bearish or bullish. You can be kind of neutral and just understanding, your risk mitigations and your different stop losses and all those things, um, despite your own personal bias, and just watch to see how the market goes. That was your alpha for the day. Stay safe, guys, and happy trading.